Today is Wednesday, February the 19th, and I think that there's a lot to talk about today in the market. Let's start where we always do with the FinViz. Volume in the Dow is low again for the second day in a row. A bit above average for the NASDAQ, low for the S&P. Bear that in mind now. 2 days in a row where we've had slightly lower volume, whereas the last 2 weeks we've been running on the upside of average volume, sometimes somewhere between 1 and 1.5. Advancers led decliners by about 2 to 1. On the New York Stock Exchange, we had advancers not quite leading 2 to 1, 1548 to 1372, so much narrower. We had 252 new highs. We should start monitoring that and see if that number moves higher or lower. The advancing volume, in spite of the numbers being close, the advancing volume was significantly higher than the declining volume. So that tells you something. The McClellan oscillator didn't move. So we still have the bearish scenario that we pointed out yesterday, where we've got this simple structure which is taking place across the neutral line, across the zero line. So we've got, you can draw a straight line down here, and we've got this shows that the bear is being in charge. Money comes into the market, gets cut short by the bears, drops. Money comes back into the market, gets cut short by the bears. Money comes back into the market, gets cut short by the bears. So this one was a little higher than that one, but not significant enough, and certainly no breakout there. So now let's look at the volatility. Volatility is down. So the fear, where's the fear index? Fear index doesn't seem to be there. Now the fear index is the number of puts, a measure of the number of puts that are being bought. And you can't tell really whether an option is being bought or it's sold. You really have to look at the price of the transaction. So we had 5,600 calls, 1,700 puts. That would indicate bullishness. Now, if the calls are paid for at the ask price, that means that they're probably buying. If they're selling, they'll be more at the bid price. This was as high as 50% midday, and it dropped to 20%. So in the morning, the puts were going at the ask price. 50% of them were bought at the ask price. Now, if you have a spread, someone is buying a call, selling a call, buying a put, selling a put, then that will happen somewhere in the middle. It'll be closer to the bid price, somewhere in between the bid and the ask price. But when you have a high amount of transactions going on at the ask price, that shows people buying calls or puts. Now that really tailed off, but look at the average here. We've got a put-call ratio of 0.3. At noon today, it was 1.5, the put-call ratio, and there was a lot of put buying going on, and then it completely changed, where the calls are 3 times higher than the puts. That's bullish. Let's take a look at what Sentiment Trader has to say. Option traders spend billions on betting that this rally won't end. So since January, option traders have been mainly buying calls. Traders have become more aggressive, more than we've seen in a long time. The surge in call buying, with their total outlay exceeding more than $7 billion in premiums paid each of the last 2 weeks, far beyond anything we've seen for 20 years. What does that mean? When you've got a lot of people in the market going in one direction, you tend to have pressure in the other direction. So these people that are aggressively buying the calls, someone is going to come along and is going to scrape off the top, and there's going to be selling going on, and it'll happen all of a sudden. The S&P ended up 16 points today. It was much higher at one point. You can see it finished lower to the lower end of its range, but we certainly looked like we had a breakout going. We've created a new closing high. You'd have to think we're going higher. Apple just completely forgot about any of the coronavirus bad news that we got on Monday. And as we expected, we have come back to test the previous high. There have been 2 days above that, but where we've drawn the 0% line that we hit first on January the 30th, and we touched it. Let me see if I can move this. We touched that 1, 2, 3, 4, 5, 6 days, and now we've come back to that level. So Apple is looking to break out, but you need volume to do that. And we didn't have the volume today, but we certainly had some of that volume yesterday. Caterpillar ended the day down 2% with this Iron Cross type of doji. Very, very low volume, nothing convincing there. We said that this, it's not really a hammer. A hammer is when it's the top part is all the way at the top, so it looks like a nail. This was a little low, but we did put an arrow there saying that that could signal a reversal. And we saw a little bit of that happening for the next 3 days. I did buy into Splunk. I said I preferred Cisco, but Splunk was moving up today. I bought it a little bit below 175. It closed at 175, dropped a little bit after the market. The spread on the options is not a 10-cent spread. It's more like a 30, 40, 50%, 50-cent spread. So it's hard to get into those at a good price, but I did get in at the mid price. Whether I'll be able to get out at the mid price is something else. But they are, look at the volume, the open interest volume. Some of these calls are traded fairly heavily. So I decided to step into Splunk because Cisco just isn't doing it. Their volume here was above average, above the moving average, and the stock was down 33 cents, so that's not a good sign. Shopify, good day, doesn't look as good here as it was, but it's still up $6.79 or 1.3% on a market that was only up 0.5%. So I still have half a position there. AT&T up 22 cents. Tesla, I got out of Tesla today. It's never going to come back quick enough into the range which is below the 300% mark where I've got my put spread. So I just got out and ate a $700 loss. Amazon up 15.57, very strong. This is what we're looking to find in Shopify. And let's look here one more time and comparing Shopify and Amazon. We're now into day 2, 3, 4, 5. And when Amazon had their earnings, day 2, 3, 4, 5 was here. So you had 2 reds, a green, red, green. Here you've got 3 reds, a green, red. So pretty similar activity here. So we had enthusiasm after earnings that pushed it all the way up to 285. So there have been buyers up there, whereas Amazon moved into territory where there had been no buyers even after the earnings. We're moving into a position with Shopify where there already have been buyers and sellers, but there have already been buyers in the past. So volume was low today, but I'm still bullish on Shopify. I'm going to put an alert right here. And if we trigger that alert tomorrow, I'm going to buy more call spreads. So we've got a little bit of mixed feelings here. We've got sentiment traders saying that the market has been, the options market has never been this bullish in 20 years. That, Warren Buffett will tell you, is when he likes to sell. And that's what he did with Apple, right? He got out of Apple, but he ended up buying some groceries and some other stock. I really didn't look at it very carefully. He sold $800 million of Apple, so that was really just taking some of his profits so he could invest it somewhere else, but he's still pretty heavy in cash. Where are we going tomorrow? You really have to think that we're just continuing to drift upwards or sideways. It's going to take something dramatic in the news, but it won't take much. As soon as we have a hint of bad news, the sellers are going to swoop in, and it'll be very fast.